Hello guys, this is Money FX, and in today's video I'm going to be doing a quick top-down analysis of gold USD. Now without wasting your time, let's get straight into the video. Now this is the monthly time frame on gold. So as you can see, price has been going all the way bullish on the monthly time frame. Now let's refine down to the weekly time frame if you can find any structure. Okay, so on the weekly time frame as well, price has been going all the way bullish. So you can see price has been coming all the way up until this point, and there was a retracement, a little retracement, and price kept going up and price came all the way down. So this is called a mitigation. So price mitigated and continued the bullish momentum, right? So let's go down to the daily time frame. So as you can see on the daily time frame, price has been going all the way bullish. Price is just, expanding, retracing all the way up. And I don't think price is aiming for a reversal anytime soon. Okay, so let's take a look right here. Okay, so this is a low. This as well is a low. So some of people might think that this is a low as well, but no, this isn't a low. Why? Because this eye, okay, this eye is under this eye, so this is just a single range. Okay, so this isn't a valid low. So let's draw a structure right here. So price has been coming all the way up. Price retraced down a little bit. Price went up. Price came down. You can't use this high because this high is below this high, right? So this is just a single range. So price all the way up has been going bullish. So let's go down to the 4 hour. There's something I need to show you in the 4 hour. So this is a 4 hour time frame. So on our daily chart, we drew a pattern, right? The price was coming all the way up, price went down, went up, came all the way down. I said on the daily time frame that this isn't a valid high. So price, this is just a single range, right? So this, I want you to check this out. So this right here, this low was a liquidity, right? The reason is because this low only broke one single high, this high right here. So you might think this low is kind of a strong low because it broke this high and then this high as well. But no, this is actually a liquidity. So as you can see, price came all the way down to tap this liquidity. It was about last week, right? Then as price price went up, came down, went up. So price tapped this low, right? Then price went up again. Then on Friday, price tapped this low out as well. So you might be thinking, why did price tap this low out? The reason is because this structure did not break any structure on the Fowler side. So this low is basically a liquidity. So that is the reason price came all the way down and started continuing the bullish momentum. Okay, so I'm not 100% sure price will definitely keep going all the way up. So I'm 80% sure price will keep going up. But according to my analysis, there's a 20% chance that price might come all the way down. Because if you go onto the daily time frame, okay, let's draw our structure right here. So you can see price went all the way up, came down, went up, came down, and went up. So this on any chart, when you see something like this basically is a liquidity because this did not break any structure on the Fowler side. So it's basically liquidity. The reason I'm 80% sure price is definitely going to go all the way up is because price has been going all the way up from the start. Okay, on the monthly it's all bullish, on the weekly it's all bullish, and on the daily it's all bullish. So I'm definitely sure price will keep going all the way up. Okay, now let's go back to the 4 hour time frame. Okay, so now we've got our bias. Now there are three things to analyze whenever you want to, enter into a trade. So we have bias, then we have range, and we have entry. So our bias on gold is bullish. Okay, so price will definitely keep going all the way up. So the range that we're gonna be dealing with is this wire. So from this low or from this low. So now it's left to us to know how to get into the trade. So this is the range we're going to be focusing on, right? This is the range we're going to be focusing on. So we know for sure next week price will keep going bullish. So by the end of next week, this could be a range. So it's left for you to know how to get inside this range. Okay, so we have bias, we have range, and we have entry. So how do you get into this kind of trade? So how do you enter into this trade? Okay, so you know how to get our entry. So I'm going to be going down to the 1 hour time frame. Okay, so this in itself, this structure is a range. So how do we get into this trade? So we get into this trade by looking for a way to enter into the market by deriving structures from this range. So we're going to derive our structure from this range. So now let's draw a pattern to see if we can see any break of structure. Okay, so this right here, we have this as well. So let me just use the pattern, right? So price came all the way down, price went up, but you can't actually use this high because this high was broken by this high. So you use this high instead. So price came all the way down. So again, you can use this low because you have to use the low that went below this low right here. So price came all the way down and price as we're going up. So even if you use ICT's break of structure as a mode of entry, you can't enter into this trade until price has broken this high, right? But the thing is, I don't actually use ICT's break of structure as a mode of entry. Instead, I use Steven breaker. So I'm just going to show you how it works real quick. So let's go down to like the 30 minutes time frame. So now on the 30 minutes time frame, I also want to show you guys something. So we have, like I said, on the 1 hour time frame, on the 1 hour chart, this is a range, but there's actually a mini range inside this range right here. So this itself, up from this high down to this low, is a range. So this is a range inside a range. So now in this smaller range, you can find an entry. So I actually got into this trade on Friday. So I'm going to be explaining exactly how I did it. So as you can see, price. Okay, let's highlight our pattern. So price went down, came up, went down, came up, and came all the way down before it started going all the way up. So this, let's take a closer look. Okay, this is on the 30 minutes time frame. Okay, so you can see right here. Let me just delete it so you can have closer look. So you can see just by some few pips, just by some few pips. So this itself is a high, and this is a high as well. So basically what this means is this order block right here is a Steven breaker. Okay, so if you want to know how Steven breaker works, I've made a video about that, so you can check it out later after watching this video. Okay, so let me just give a quick example right here. Okay, so on, let's say, the ICC break of structure, so price came all the way down and there's a break of market structure, so price breaks only one single eye, so this eye right here. So this is an ICC break of structure, but the Steven breaker is slightly different. So on the ICC break of structure, price needs to break only just one eye. On Steven breaker, price needs to break two eyes in order to become valid. So price has to break two eyes. So whenever you see price breaking two eyes on a bullish trend or two lows on a bearish trend, that is a Steven breaker. So going back to our chart, so as you can see, this is a valid order block using the Steven breaker concept. So price broke two eyes, right? Price came all the way down. But the thing is, if you actually check this order block, it's kind of like a very big order block. Okay, because let's just pull out let's put a position right here. Let's check how many ratio we're gonna make on this order block alone. So just to get about a 1 to 5 risk to reward ratio, price has to go even beyond 3,000. That's crazy. So the thing I always do, if I see a very big order block in the market, what I always do is divide that order block. So this is what I did. So I always divide that order block by 50%. Then I just set my entry right here. Then I set my stop loss right here. So that's what I always do whenever I see a very big order block. So I'm just going to highlight this once again. Let's try to refine the order block. Okay, right here. So let's bring it down right here. So if we're going to add a position to this, this is going to be massive. Okay, this is going to be massive. A lot of people have been analyzing and they have been predicting like price is definitely going to go to the 3,000 level. So let's just say we set our TP at the 3,000 level. Okay, that's going to be above 1 to 10 risk to reward ratio. Okay, and this is a 30 minutes time frame. You could refine down, to the smaller time frames like the 15 minutes time frame and the 5 minutes time frame. Okay, so now we need to check if we can find any structure that we can use to enter into the market next week. So this is a structure that occurred on Friday. So I don't think it's gonna be possible to enter into this trade again. So let's try look for another structure. So let's go down to the 15 minutes time frame. Okay, so on the 15 minutes time frame is quite all the same. So I'm gonna refine down to the 5 minutes time frame. Okay, so now on the 5 minutes time frame, so this is our range from the 4 hour. Okay, so now let's try to draw a pattern. Let's try to see if we can see any pattern on the 5 minutes time frame. Okay, so first of all, we have this right here, okay, and we have this as well. Okay, so let's draw the pattern because this right here could be tricky. So price came all the way down, went up, came all the way down, went up, and came all the way down. You can use this low, okay, because this low did not break the last low. So you have to use this low right here. So price went up, came all the way down, okay? It came all the way down before it started going all the way up. So on a 5 minutes time frame, right? We have this eye, we have this eye, and we have this eye as well. But I'm going to advise you not to use this eye because it's very close to the eye of the range. Okay, so if we're going to enter into this trade using the Steven breaker concept, so we're going to be looking forward for price to break these two lows. So when price breaks, okay, so price might definitely go all the way down because this is liquidity. Price might go down on maybe Sunday, then price will definitely keep going bullish. So if price breaks this side, this is gonna be a confirmation. So you can just enter using this low right here, then price will keep going bullish. And it's very possible to see an entry on Monday. It's very possible to see an entry on Tuesday. Just never know. Just never know. This is all a forecast. This is definitely not going to be 100%. You could even see price, on Monday or Tuesday keep going all the way down, but price is definitely going to go all the way up. Okay, so this is going to be the end of the video. If you really find this video helpful, please be sure to like this video. And if you have any question at all, you can type in the comment below. I'll be sure to reply. And you can also check out this video as well on how I was able to catch a 1 to 10 risk to reward about last week. Also, if you want to get more content like this in the future, be sure to subscribe and turn on the notification bell so you can always be notified whenever I make another video. See you in my next video.